I don't do those investments based on like principal that could be earning other cash, right? I want to get the cash flow first. So all of these tech, SaaS, early stage, mid stage, late stage startup companies, like all this is not coming from money that I could be earning cash flow on where I need to cover my expenses. It's coming from the cash flow into those investments. And I think that's so important for people to understand. If an investment doesn't go well, and I do an early stage investment, it doesn't go well, I put in a smaller amount. I generally am like you, where I go smaller early stage, a little more mid stage, a little more late stage. But let's say it doesn't work out. Well, I didn't lose the money as like principal because it was already in a cash flowing asset. I only lost that amount from maybe that month's distribution to me. So that's not as big of a loss as if I had just invested in something, it went bad, and now I don't have the principal that I could draw interest on or earn, my lifestyle expenses on. And I think that's really important for people to understand.
Yeah, I see it as a pot, right? So if you're constantly just taking out of the pot, it's going to get empty. So if you have streams that are coming in and you're taking some stuff out of the pot and putting it somewhere, even if you lose, the pot's being refilled. And that's always the key, is make sure the pot's being refilled. And yeah, sure, you might sometimes find opportunities where you want to deploy funds and you take out of this pot, and you don't know until later whether it's going to be a good decision or a bad one. But in the meantime, as long as your pot's being refilled with something, whether it's ideally it's passive income, but either way, if it's active or passive income, because even active income, I see a lot of times people, they just take it and put it all back in their business. And I've had this conversation with so many entrepreneurs. I'm like, so what happens if your business goes to zero tomorrow? You pretty much everything you've worked for is gone because you got all your eggs in that basket. And I get it that that's all you know how to do, but at the end of the day, you have to be able to take some percentage out of that active income and be putting it in this pot, so that you're building this pot from both active and passive, and you're diversifying your active income, because that way you're not completely dependent on your business or your job, which is what ultimately gives you the freedom, is to be able to make this pot as big as possible, as fast as possible. And that's always my goal, is how can I compound this pot as fast as possible and in a relatively safe manner. I know I'm going to make some bets, and as the pot grows, I'm also able to make more risky bets on certain things that I call them, asymmetric risk versus return. If you make a bet and it wins, it can be a huge gain. Whereas if it loses, it doesn't change your life because you've got this pot that's being refilled. And so, the more you can do that, the more you grow the potential of you getting outsized returns over time.
Yeah. And let's take that one step further, because I love asymmetric risk reward. And let's say, this is something that you and I do, where you take an investment and so the risk could be it goes to zero if you're in a stock. But what happens if you invest in a way that you're mitigating that risk? It's an asset that can't go to zero, right? So now your downside is maybe only a 15% loss, but your upside is pretty massive. Well, now you're creating even greater asymmetric risk reward, which is cool. And then if you pile on 4 or 5 or 6 investments just like that, you only need one to hit. All the others could fail. And it's also still mitigating risk on the downside as well. So you're mitigating risk with the variety of options and with the exponential return that only one has to produce. But you're also using money that you don't need somewhere else. It's just cash flow. So it's not going to affect your life if it doesn't work. And so all these strategies, I think, are so important. And, you mentioned this. It's like most business owners have all their money, all their profit right back in their business. But we know that less than 10% of businesses survive. I think it's 4% of businesses survive.
Like over 10 years. Yeah.
Right. So the odds are actually really good if you're a business owner that's going to fail at some point in time. A lot of people, unfortunately,
or it's going to take, your revenue is going to take a hit, right?
Yes, exactly. Exactly. So
cash
maybe it
flow
still
goes down.
survives, but it impacts your life tremendously, your lifestyle.
Right.
So yeah, putting your profit into something else to diversify, I think is a great move.